In the last video, I spoke about Alibaba and where it's going to go, my expectations. And if you guys remember, what did I say? I said Alibaba is going to go to exactly $110. Look at where we closed today. $110 to the T. Literally played out as perfect as I said in my last video. Now we have what I expected and what I spoke about is the 3 touch points on our higher level of resistance. And in the last video, I already explained where we'll be going from here. Now this video is not about that. It's just to go ahead and recap, refresh on my last video. That being said, if you want to get the latest and greatest in the markets, make sure you join my Discord. The link for that is in the video description below. Click that link, come through. Looking at the week ahead, I want to look at a couple of names out there and talk about expectations and what we will see moving forward. I want to start with gold because gold is unique and gold must be spoken about because it is the strongest thing in the market right now. It's seen a phenomenal trend over the last couple of weeks, a lot of strength, a lot of upwards price movement in gold that we've seen. And we've come to a very interesting point right now. Gold sitting at this 1870 level. Now, when I last touched on gold, I said we should probably reject from that level. And that actually happened. You got that red candle there. And then it picked back up where it left off. Now, if we were to see gold go ahead and break through the current level of resistance, we're going to very easily see gold move right up to the 1910. It's going to be no problem whatsoever to see gold. If you see that break and you see some more momentum, it'll go straight to the 1910. There it might be met with a little bit of resistance, a little bit of choppiness, but the strength in gold looks to continue if you get that break above that 1870 level. As I said, gold is unique. Gold's one of the strongest things out there in the market right now. It's completely in a league of its own. If I was to go bullish on anything in the market, it would definitely be gold. Once I saw that clean break of that 1870 level. Obviously, a rejection of that level would send it back down to the lower demand level at 1830. But you should get a nice break on gold. Moving on to the SPX, SP500. Now we saw some good moves today. Okay, we saw some good moves, saw a nice little break of the 3910 level. Nice little break. A little bit of a pullback on close on the day. Now, disregarding the fundamental picture and the key events that are coming up with the Fed meeting tomorrow, CPI on Thursday, this actually looks good to move up. But taking into account the fundamentals, I wouldn't be playing this to the upside. There'd be no reason for me to try and chase SPX to the upside given the fundamental picture right now. So right now we've got this detachment between the technicals and the fundamentals, and it often creates phenomenal trading opportunities if you know what you are doing and if you are prepared to be brave and go against the grain of the market when it's moving not in accordance with technicals and fundamentals. Now, if I was going to trade SPX, I'd actually be looking for a nice clean break back down and give up some of the gains that were made in the session before. A nice clean break back down towards that $38.70 level. Right there, that will send a weakness signal to the bulls and the rest of the wider market. And that would then allow it to give up some further gains after that. And then you could see a real trading opportunity, a real profit opportunity on the break of the $37.90 level. So there's no way I'll be playing this to the upside right now. I'll be looking for the downside. Obviously, the market is not in alignment with the fundamentals. Looking at the US30, again, nice break on the day on the US30. Without any kind of recognition of the fundamental situation, this looks good for an upside move, a continuation move to that 34,200 level. However, if I'm going to trade US30, the Dow, I want to see it break back below the structural level that was broken out and create a nice fake break situation to capitalize onto the downside. I wouldn't be playing this to the upside. It wasn't long ago that we saw the double top peak in the US30, and often price action, when you see double tops, when you see that double top peak situation with the US30, like you did right here, it's often characterized by further downwards movement. You saw it there, you saw it here as well. It's a nice exhaustion signal on the US30. And we got that not too long ago. So chasing this to the upside is a very dangerous situation. Where you have much higher probability of success of a winning trade if you were to get a nice break back below previous resistance, right, or the current support level, recapture the previous consolidation channel, and then you get the real profits on a break down below that support level of that 32,700 level.